All right, guys, what do we have? FXI, man. I picked that up on screener.nextbigtrade.com. All I had to do was I started by the index, and then I went to emerging markets, and after that, select stage 4, and I got a whole bunch, man. And FXI, that stood out to me, guys, and that is iShares China Large Cap ETF. Here's my monthly candles. You know what I'm doing with that? I'm going to identify my monthly defined resistance. Duck. What else? I need to identify my monthly defined support. Oh man, it could have been right here. Could have been right here. We could be breaking down right now. And you know, these are monthly candles, right? You start getting used to it, and you see right away what that's going to look like on the weekly, guys. That's going to look like a stage 2, stage 3, and definitely stage 4. Are we going to be out of the Ichimoku defined support right here? I guess we'll find out when I zoom in. What else do I have here? Let me put my little arrows. Here's the target. Oh, tack. And another one. So it's en route to target, guys. Here's my target right here, about 38.75, and it coincides with what I call a wall. What's the wall? It's a previous support turn resistance, or previous resistance turn support. And here it is. See that nice base that I had it back a few years back? Resistance broke out. Now that's going to become support. So it's important when you have these targets on using my chart trading framework. I have a thing called target considerations. Always make sure you're on the right side of that wall. You don't want to have to lower your chances of reaching that possible target by running into congestion. Just make sure you're on the right side, and you're good to go, guys. And I'm so curious. Let me get a little arrow here. Cape. Space. And that target was reached. See those two targets? That target here, even if the more greedy pattern, it was reached after that breakout a few months later. And now we're running to the top. All right. It's pretty clear cut that this is definitely going to be in the downtrend, at least all the way till we test that previous breakout line at 38.50. So with no further ado, I present to you the weekly chart. What else do we need? Pat? We need volume. We need Ichimoku. Oh, we're out of the Ichimoku cloud, guys. No more support. Remember that green cloud? If you're above it, you're in an uptrend. And if you're below a red cloud, you're in a downtrend. You see here, that's a projection of the Ichimoku cloud. It's showing that we're going to start a downtrend right here. 30-week moving average. And we are under the 30-week moving average. Stan loves it. Horizontal breakdown line. Below 30-week moving average. It's skewing downwards. Check. And here we have the ultimate check. Oh, okay, we're not on NASDAQ. I'll put a S&P 500. Wow, okay. You see how we had this nice stage 2 before? Then out of stage 2, stage 3, give signs maybe of stage 2. No. This indicator, what it does is that dotted line is the Mansfield 0, Mansfield relative strength. If you're below 0, that means you're underperforming the index you're in. If you're above, that means you're outperforming. This is one of the criterias of Stan for the triple confirmation. And what it does even more, the author of the script that does this indicator, he added red highlight or green. Red highlight, that means you're below the zero line. It means the price action is below the 30-week moving average. And it means the 30 moving average is also skewing down. So he took all these little details that Stan looks for in his book and he programmed them into this indicator. So this is really, really nice, guys. So what we do usually, I look for the beginning of a red zone because I know it includes the criteria of the 30 moving average going down, the price action being below 30 moving average and below the zero line. And then after that, we add on top of that our checks. Ichimoku cloud, I want to make sure I'm out of it. Potential support, I don't want to get whipsawed. I want that pure stock that's going to rip down through it with no support. We also go and check if there's a crescendo volume on those breakdown candles like this. And if ever there's a pullback or green candles in that stage 4, we want to make sure that they're lower or contracting. And we have the monthly, applying my chart trading framework on the monthly candles to get that ultimate higher prevailing trend that Stan wants us to do to make sure it's in our favor, guys. Wow. When you get all that, then you have confidence. You have confidence that it's time to go in. Your chance of getting whipsawed will be minimized. So what do we have here? Definitely stage 4. We're out of the cloud. Some pullback right here. Slow down after that initial breakdown right here. These candles going down. This one. See, here we would have not played it because we would have been still in the Ichimoku cloud support. So we just waited. Constructive. It's like, remember those initial breakouts I talk about? Breakout, secondary breakout, another breakout building on those, creating bigger patterns. Same thing. You inverse it. That's it. Inverse it when you do stage 4s. Don't be scared. Same thing. And when it starts falling, usually it falls a lot faster because there's a fear. And people get feared. Those candles, they're stronger and they drop faster. When you build up, stage 2, it's the opposite. It takes time to build greed. So then you build it up, explode, get scared, sideways move, people selling, taking profits, explodes, etc. But when it goes down, timber. So this is definitely completely underperforming the index it's in. So how do we approach this, guys? Let me see. Let me zoom in. Zoom. Yeah. We have a couple of choices, right, for the entry. What did I say for the monthly? Okay, the monthly is already on way to target, guys. So we're smacking no man's land. What might happen here is any entry you take right now, you have a chance of getting pulled back. It seems to have been here, guys, the pullback right here. Let me get my super duper pen. Yeah, the pullback there seems to be been right here. Smaller volume than those breakdown candles. I would have still liked it to be maybe a little lower. What's a high? What's a low? Well, to have a high, you need to have a low right after, right? So let's say we're going down, low, and then we go go high. To know that this was the peak, then all you need is another low candle below it. So right now, right, this, this is the peak. If you would have been in here or here, then this is how Stan does it. Remember on those pullbacks, you move your sell stop. Let's say you would have entered here. Your initial sell stop would have been above here, above the breakdown pattern, above the 30-week average, above a round number. And then after that, price action goes down. Pull back, price action goes down again, back to previous lows. Trader, move your sell stop right here above that peak. Investors above that peak, but way above the 30-week average, just to protect yourself. Because you're an investor, you don't want to get whipsawed out. You're less aggressive than a trader is. So right here would have been the peak, and now price action starting to go back down. And that's your sign that you could have entered right here. Could probably enter here. If you really, really want to be safe, maybe you want a weekly candle below this little pattern there, this little sideways move. So if you have a weekly candle here that closes right below, what's that level? 42, then you know you're going to be continuing down. But for me, the pullback's done, and you're below the cloud, and this should be going easy all the way to this monthly defined wall, previous resistance and support, all the way down here, 38 level, just about those levels here, 38. Wow, FXI, man, emerging markets not looking too good, guys. Let's take a look at a step back. Ooh. And sell cycles, you know. Don't get attached to a stock. I don't know how many years was this to peak. This is May 2015. So 3 years later, we're back at the peak, and we might be going down for the next year or so. Was that May? Yeah, about a year to go down, then 2 years to go up. Maybe we're going to go down a year, another 2 years to go up. It's a cycle, guys. Just make sure stance framework is great for that. I'll save you all the hassle of being chopped out in this when you don't know what the hell's happening. You don't know why the price action is pulling back harder than it should. Well, he built the sell stops to move along to recognize characteristics of the end of a stage 2, guys. If your pullbacks are higher than the previous pullback, it's not a good sign. That means you're violating some type of trend line. The trend, the momentum's on your favor. Oh, check it out. We'll do it right here. Let me draw a super duper line. Here in the stage 2 right here, guys. Back in the days. Tuck. Toop. We need, and a Stan Weinstein trend line, guys, it's 3 points and the break on the fourth. 1, 2. I don't have a trend line here. You don't always get it. If you don't, well, just like I said before, price action goes up, pull back, price action goes back to previous highs, sell stop moves here. Pull back, price action goes back to previous highs, sell stop moves here. The trader's way, remember, investors' way down here. Pull back, price action goes back up. Same here, and just move it along. Oh, price action goes down. Pull back up. And when the price action gets back close to previous highs, then you move your sell stop. Price action goes up, goes down. You do not get triggered right away. See that? Close for traders, investors a little further away. Could always make sure you're below a round number. Price action starts going back up. And these are signs, guys, when you see these wicks and really treading lightly on that 30-week average, your brain should be okay. It's my stage 2, guys, might be starting to get to an end, guys. Then the investor's way, you start moving your sell stop as a trader. So you're getting really aggressive. You don't want to give anything back too much. See, the price action doesn't go way back as high as before. Price action goes back down, then goes back up close to previous highs. You could have eventually maybe you move your sell stop here, but now like you're really deep into under 3-week average. And after that, when this candle came down, traders usually any close below the 30-week average, you're out, and investors you wouldn't have triggered out here on this pullback, or you could have acted like a trader and pulled everything out right here. So that's still pretty nice, right? You had most of this run. Let's see, you would have started here. That's all the run, man. And look at this super duper cool tool, guys. So you would put your entry here. This is a risk calculator, guys. Gives you risk to reward. So you would have risked 1. You're position sizing here. And this is your reward, almost 2. So almost a 2-to-1 gain on that. Not bad. You accumulate those. If you have 4, 5, 6 other stocks that give you those type of returns, then it adds on, guys, for your end of the year. And right now it's the opposite, stage 4 going down. So you see how you're going to play it? Definite stage 4 in progress. You could enter here if you want to, knowing that this is the candle that closed below that green candle here, saying that this is the high. You could put your sell stop even right here, enter here. Or if you want to be ultra defensive, wait till you have next week's candle close below this one, just a little lower. Put your buy stop here and just let it do its thing, guys. All the way down, pull back, all the way down, pull back. Do your trend line. If you can, eventually have a trend line. And if it's violated, then you're out. All right? That's it, man. Enjoy it. Ciao.